Okay.
Okay. Uh, we are very fortunate to have with us today Michael Spilky. Mike is widely recognized as an industry leader in the food and beverage sector. And he has been in this trade for about 20 years. He's completed over $350 million in transactional values that he handled as a broker. That's leases and sales. He represents both regional and national restaurant brands. He also advises landlords, tenants, investors, lenders, and appraisers. They come to Mike for his expertise. And he's also an owner himself and founder of food and beverage businesses. So he knows this industry from all perspectives. Michael, welcome and thank you for joining us. You were with us in 2021, about 3 years ago. Is Mike
I'm
here?
here. I'm here. Yep. Yep. Hello. How's it going? Hi, Nick. Thanks for having me.
Hi, Mike. Thank you for being here today. Um, I'm going to ask you a question before we delve deeply into food and beverage, but an aspect of that, we've been living with higher interest rates for a couple of years now, much higher rates. Has that impacted the sector that you specialize in, food and beverage?
Interest rates are more so your territory, but I think, as you probably know, yeah, interest rates affect everything in the economy, and restaurants are just the same. So we have less money to spend in general because we're spending money on interest, and so that's less disposable income. And for sure, I mean, it also affects the restaurant owners themselves, their ability to borrow. And a lot of restaurants also carry floating debt at times, and so increasing interest rate environments is going to drastically affect their cash flow. So, yeah, on a number of fronts, I think interest rates affects everybody. And so we're feeling it in the restaurant business from an operator perspective, and I would also say we're feeling it from a brokerage perspective. So it's driving down transaction volume across the board for all of us.
What are you seeing, Mike, in terms of the regions you typically operate in terms of rents for restaurants? Let's say over the last year, are they rising or, about the same? What's the trend there?
Yeah, so as we know as brokers, I mean, rents are very specifically based on geography, right? So rents in Los Angeles County or San Diego County or Orange County are going to differ, and they're also going to differ by a dynamic trade area. So something on the coast is going to be very different than a suburban market, and that's always been the case. But I guess if you're going to look at rents on average across the board for retail and for restaurants, we really have seen a very large increase in rents, I would say, over the past 5 years. Over the past year, I feel like rents have been pretty flat and just remained fairly steady. And maybe that's due to the interest rate environment. Maybe that's just due to the overall economy. But rents in general have drastically increased, just like I think everything else has increased in cost, right? And so rents also have increased, which has benefited landlords who bought, in the last 5 years. And any tenants who signed leases pre 5 years ago are probably doing pretty well with 3% fixed increases or whatever they might be in their lease. And so yeah, that's essentially what's happening. I don't see rents dramatically increasing for the foreseeable future, unless the economy really gets very robust and consumer spending increases.
What would you say is the overall sentiment in the industry now in terms of investors coming in? Is it bullish, or are investors more hesitant at this time to get involved in food and beverage?
Yeah, so I think what you're asking me is the restaurant investors. So somebody that's opening a new restaurant, are they wanting to open more restaurants? Um, the restaurant environment is not has not been great. I mean, I think restaurants are very challenging businesses to operate historically, but every year that has gone on, it just has gotten even more difficult, particularly in California. And unfortunately, I speak with restaurant owners, and I'm sure a lot of brokers on this call that speak with owners are feeling the same way. These restaurateurs are struggling for profit. Their costs have increased significantly. Their particularly labor costs have increased. Their food costs have increased. The rent costs have increased, and now we're seeing some decline in sales as well. So it's almost like we are in a recession for restaurants, and maybe we're in a recession in other industries, but we're not being told that. And that's how it feels with most of the conversations I have with restaurateurs. I think that there are some outliers, and there are some very successful restaurants, but those are outliers, and there always will be those outliers. But generally, as an industry, restaurants in California are struggling, and we're getting a lot of phone calls from restaurant owners and bar owners that are trying to figure out how to exit this industry, and get some of their investment back by maybe selling their business, or selling their assets. And I would also say there's probably a lot of landlords that are not receiving their rents on time, and there's probably a lot of landlords that are giving maybe rent relief to their some of their restaurant tenants. That's the environment we're in, and that's sort of, I feel like, the behind the scenes that you don't hear every day, but us as brokers and operators are in the thick of it, and that's really what's going on.
Mike, what is the explanation for that? Are people simply dining out less, Americans? Are there demographic changes that may be causing this? What is your take on
Yeah, I
that?
think it's just, we all go out to eat, and if you went out to eat 2 years ago, something might have cost you, a party of two must have cost you $70, now it costs you $120. And so I think there's a sticker shock that's occurring, whether it's going out to a full service sit down restaurant or even to a fast casual restaurant to get a burger. The prices have increased pretty drastically over a short period of time, and I think that's reducing the traffic that that customers, that these restaurants are seeing in their restaurants. And so with that, we are seeing sales declines. I get financials from restaurants pretty regularly, and over the last few years, sales of these restaurants has declined, and that's because of traffic. They've increased their prices to try to stay afloat, and that's dropping the overall traffic. Another thing that I think that we're seeing in the restaurant industry in particular is that over the last 3 or 4 years post-pandemic, a number of restaurants received all kinds of free handouts from the government. And there was the ERC money, that was the latest one, and employee retention credits is what that's called. There was a restaurant relief fund that gave tons and tons of money to restaurants, and then there was the PPP money we all know about. So all of that is now basically dried up, and because of that, what we're seeing is restaurants that were doing just okay before, that received all this money, now have no income coming in, that free money, now have no profit or have very little profit. And so they're trying to figure out what to do, because all of that money kept them afloat during this hard time. And now times are harder, and they're all trying to figure out, do they stay open or do they go to their landlords for rent relief?
If Americans are spending less now at restaurants, at leaving their homes to go somewhere, restaurants, bars, where's that money going? Is it delivered food or more food being purchased at grocery stores? Where do you see those dollars flowing to?
Yeah, I don't know. I mean, I personally, I have a family. I have 3 kids, and we can't go out to eat all the time because it's just really challenging to do with the kids and a family and working, and two parents that work. So we do cook. We don't necessarily love cooking, but it's just what you have to do. I think that when somebody's going out, they might be buying a little bit less. Um, there's so many different factors that go into how consumers spend their money. And, there's also just different demographics, right? You have, very wealthy communities with disposable income, and none of this that I'm talking about really matters to them. And, thankfully, little pockets here in my city in San Diego are doing just fine. It's probably just like Newport Beach, right? I mean, it's probably, none of what I'm talking about is going to matter over there. But the vast majority of cities in California and America are struggling. So,
What are the concepts that are working now that are successful in this environment? I'm talking about restaurant and bar
sure.
concepts.
Yeah, I mean, really smaller footprint restaurants where convenience reigns. So a smaller operation, something between 15 and 2,500 feet that has a reasonable rent that offers convenience and a customer can go to on a regular basis to get, a healthy food product, essentially, something that you could eat several times a week. Those are the restaurants that seem to be doing pretty well. And there's this interesting outlier too, where chicken seems to be and has been this really hot commodity in a fast casual format. So, you've seen all the different hot chicken operators, but chicken in general, either in a drive-through format, but all with convenience in mind. So something that you can just go in and in 2 minutes pick up and take out to go. Those seem to be some of the outliers in the space for sure they're doing well.
Well, you mentioned drive-through there. How significant in fast food is a drive-through versus a non-drive-through facility?
Yeah, so drive-throughs are hot. They're very hot, and they have been for a long time. We have a very big supply and demand issue with drive-throughs. The permitting process is really challenging. The land that it uses is challenging to find in most trade areas. So, and
Why
there's a
why
very
is
high.
permitting, Mike, why is permitting more difficult for drive-through?
A lot of cities just don't like drive-throughs. I mean, the smog that cars standing use, the type of customers that maybe they perceive go to a drive-through. I don't know, for one reason or another, a lot of city planning was planned around minimizing drive-throughs, and all of that legacy planning is still in effect. And so there are a lot of different uh, cities and municipalities that actually have outlawed drive-throughs, or there's a maximum number of drive-throughs in that city and they won't allow any more without some kind of a drastic change to zoning. So because of all of that, it's just created a vast supply and demand conflict, which is just creating a lot of you know much higher rent, I would say, for those drive-throughs, right? So, and the only players in the space that can really afford some of these rents are the ones that generate significant volumes, which most of them are chicken operators. The Chick-fil-A's of the world and the Raising Cane's now, and um, yeah, there's always the big burger guys that can afford very high rents, the In-N-Outs and things like that. But there's
What
only
would the
so many.
difference be, Mike, in rent? I mean, just as an average between an operator that will pay for sort of the same sized restaurant or fast food for drive-through versus non-drive-through.
What are the difference in rent?
Yeah, how much more would you need to pay for the drive-through than a site that does not have drive-through? What's the premium for the drive-through?
It's possible it could be 50% more or even greater at times. Let's say a 25, just as an example, it's like a 2,500 foot end cap space in a restaurant in a shopping center, at least for $4 a foot triple net or something like that. Whereas a drive-through could lease for double that. And typically drive-throughs will lease as a ground lease, and we're seeing 2,500 or 3,000 foot drive-throughs lease for 300 to 400,000 a year in ground rent. And if you back that into what a traditional restaurant can afford, At the most, it's probably a 10% occupancy. So, that's a $4 or $5 million restaurant with triple nets minimum.
And we've really sort of touching on this. I was going to ask you about environmental thing, the greening trend in across our society, but how is the greening of America, to use that expression, impacting on food and beverage?
So it's a little bit out of my specialty, my expertise, I guess, the greening of America. So, I mean, for me, I'm seeing like more of a health conscious consumer, at least in the spaces that I'm working in. So a lot of restaurants, this was kind of a thing. You're bringing up something I remember. This was kind of a thing about 10 years ago. There was the Green Restaurant Association, or something of the sort. And yes, there was a lot of effort put into making restaurants greener, and how they use their trash and things like that, and how they recycle and reuse their oils and things like that. But right now there isn't as much of that. I think that was a pretty heavy trend for a while, and now it's just restaurants trying to figure out how to continue to be profitable.
How are bars doing? Are they doing any better relative to restaurants at this time?
Yeah, bars are always the best. As a landlord, I always want to own as many bars or bar-centric restaurants as possible. There's different types of bars, right? There's a bar that's licensed in California with a Type 48 license, and that allows a bar to not have to have a kitchen or sell food. So just something to note there. Those sorts of businesses can operate on lower volume because the margins on alcohol by themselves are far greater. So those bars, if they're in a great location and have a great operator, usually tend to be okay and thrive at all times, in recessionary times or good times. Now there's restaurants that have a bar, and there's restaurants that what I would say are bar centric. So they serve food and they have what we call a Type 47 license. And a Type 47 license allows them to serve alcohol and food, but they have to serve food. So a lot of the more successful restaurants that are bar centric, the ones that are selling more 50% or more of their sales in alcohol, for good reason, because the margins on alcohol are far better than food. So those are the restaurants that I would say are more successful in today's environment, the ones that are really pushing more of a bar scene and have a higher volume of bar sales, for sure.
If you're going to open a restaurant or bar, what will a liquor license cost in California?
Yeah, so licenses have actually increased really significantly over the last couple of years, just like everything else. But here in San Diego County, a license is around $150,000, and that license that I'm talking about is a Type 47 license. And a Type 47 license in Orange County, I just looked it up. There are websites you can look up these prices. Probably around 120,000, upwards of 150,000. In Los Angeles County, they're a little bit less, 100 to 130,000, something like that.
And that's for a hard liquor license. Is beer and wine a different cost?
Yeah, so a beer and wine license is just a permit fee, whereas a liquor license actually has a personal property value. It's an asset. A beer and wine license, you just pay a permit fee annually for that license, and that's it. And it's not something that you can move from one location to another, or really that has any intrinsic value. The only one is either a 48 license, which is that bar license, or a 47 license.
Mike, you're an investor in restaurant bar assets, and you founded that. Sorry, hang on here. Let me mute and I'll let you answer.
Cute little dog in the back.
Getting a delivery here at this premises. What I wanted to ask you about is your own experience. What's it like as a founder? And now I assume you're raising funds for restaurant investment. how's that different from brokerage, and what's the skill set required as a actual investor in the industry?
Yeah, so I'm actually not actively investing in restaurants at the moment. I mean, if there's an opportunity that comes up, there's one I'm looking at. But we did have a private equity company that I sold to my partner a couple of years back, and we did raise money from investors. We did invest in emerging restaurant brands. That was our business model. One of the restaurants early on that we invested in was Burger Lounge. Another one was Cucina Enoteca. We opened that Irvine Spectrum location years ago. So we definitely had some experience doing that, and that was it's a whole different world, right? Investing in the business, and so I think there's just a lot more risk associated with it. Obviously, we've had some successes and we've had some failures. Um, really understanding locations, of course, is important for both, whether you're a broker or whether you're an investor. I think leveraging the location and brokerage relationships that I had at the time was very important in making good investment decisions. Helped us to negotiate leases, obviously, having a great brokerage background. Um, but investing in the business, it's really all about people at the end of the day and concepts. So long as you have good people running the restaurants and the concept is something that's really craveable and desirable, then making those investments can make sense. And so our business was to not invest in startups. Our business was to invest in already successful brands that we felt like had the ability to continue to grow, and we could grow them with our capital and expertise. And that was our model. And that's what we did, several times over. And since I basically exited that as a job, I'm doing mostly brokerage. And actually, we have another business which is more investing in value add real estate. And so kind of running the trifecta of the restaurant real estate world, right? Investing in restaurants, being a broker, and also investing in value add real estate. So
Quite the balancing act is we're all trying to adjust to these market conditions. But on restaurants, I heard a percentage, and this is totally without any documentation, but at one point that like 90% of restaurants that open do not survive beyond a few years. Is there any percentage that you know of or you've heard about that reflects the success rate of new restaurants?
not necessarily. I think that's like this, old colloquialism or something
Yeah.
people say. I think just like any business, businesses have a failure rate, and they don't all succeed. And either you hit the mark or you don't. And it takes energy, and it takes the right expertise and experience in the space of a restaurant operator, somebody that has had success for somebody else, has that drive and has that business acumen, picks the right location, signs the right lease, and then executes pretty flawlessly, which is needed when you open a restaurant. If you open a restaurant and you execute wrong the first couple weeks, that's going to be pretty bad for your restaurant. You know how it goes. You go into a restaurant, it's great, it's amazing, and you tell all your friends, or you go to a restaurant and it sucks, and you tell all your friends how it sucked, and that's the end of that. So, it's a challenging business like many others, but I think it's definitely not as forgiving as some businesses, obviously.
Yeah. And in the world of malls or larger retail centers, is food and beverage becoming a bigger percentage of the total square footage of those locations, or is it shrinking? What's the impact in that area
Yeah,
of
so I'd like
food?
to look back maybe like the last 5 years, because today things are just a little choppy in the waters, I'd say. Over the last 5 years, for sure, restaurants have taken over more of a percentage of retail in general. And that's due to a number of factors. But yes, in a shopping center environment, restaurants have played an important role as a traffic driver, and the supply of retailers and has decreased. A lot of online retail has taken away a lot of that. So in general, yeah, the experiential retail is where it is today, and part of that is the restaurant industry, and restaurants have played a big role, particularly in larger shopping centers. You know, the larger regional malls that you see out there, you can definitely see restaurants picking up activity over the last 5 years. Now, whether they're successful or not is another story, but they definitely, landlords and leasing agents of landlords have pushed to convert former retail space to food space. And so the percentage overall of food space is now greater than it's probably historically ever been. And it's possible that that's playing a role in a restaurant sales volume decline, because the supply of restaurants has grown significantly over that 5-year period too.
And Mike, as we wrap up here, wanted to just ask you your personal background. As I mentioned, you've been doing this 20 years or more now. You actually started, or one of your first stops was at BJ's Restaurants. What got you into the business in the first place? Were you interested, at a young age in food and beverage, or how did you end up being a specialist in this sector?
Yeah, well, I mean, it's some of it's a little obvious. I mean, I grew up in the business, so I don't know, if there's anybody that knows my dad, he's in his 80s and he's still working. He might, I don't know if he's on this call or not, but my dad's in his 80s, and he always focused on restaurant real estate. He actually owned and operated restaurants before I was born and just after I was born, and he leveraged all of that into his brokerage business. And so growing up around it was definitely a pretty big factor, but obviously when I graduated college, I didn't know exactly what I wanted to do. And so one of the easier jobs to get was a job in restaurant management. And so I managed a high volume restaurant in Gaslamp in San Diego. I went through, it was a national franchise brand, went through their training program, worked at several units, and, kind of figured out how much I didn't like operating a restaurant. And so and I also knew I wanted to make more money, and that wasn't a vehicle to make more money. So eventually I exited that and got my license and started working in the brokerage business, and had to grind it out in this city because there really wasn't any. My father didn't have anything going on in San Diego, so I had to hit the streets, meet all the restaurant owners, meet all the landlords, establish brokerage relationships from the ground up, and just be a cold call machine. Basically, that's brokerage for you.
Michael Spilky, it's in his blood, legacy through the family, but has become really an expert in this field regionally for sure. We really appreciate you sharing so many insights with us today in food and beverage, and we'll have you back again, and hopefully in stabler times for this industry.
Yeah, thanks for having me on election day. We'll see what happens. Either way, it's going to be. We'll stay positive, and
Absolutely.
everything is going to only get better from here for sure.
Yeah. We agree with that. Thank you again. And
we do
at
have
this
a
time,
question from George Kivett.
Yeah, go ahead, Mike. Are you okay with taking
Sure.
up?
Yeah. Go for it.
Go, George.
Thank you. Unfortunately, there are a lot of restaurants that just don't make it, but a lot of times there's significant improvements, between the tenant improvements and the equipment, the FF&E and such that are still in place. Is there any general rule of thumb for pricing those assets? If it's decent location and such, but just as far as a resale, just those assets in place after a restaurant's closed.
For sure. Yeah, that's a good question, and we do a lot of that. One of the questions that wasn't asked here that I prepped for, I think is really what restaurant locations are in demand. And I think for us, we call it second generation restaurants. So a
Mhm.
closed restaurant space that has all the infrastructure and big investments been made in the space is probably where most of the demand today is lying. And if it's something that's really rare and it's located in a great location, and maybe it has a below market lease, there's something there that somebody could acquire. So somebody will pay something like, we call it key money. So they'll pay a premium of some sort for that ability to go into a location that's already fixturized and that has, it's just more rare, a better location to get, so they'll pay for it. The actual cost of that and what somebody will pay for it depends on so many factors. A lot of it's location driven. And if it has a liquor license, that's obviously a asset value there, wherever it's located, 150 or 100 grand or whatever it is. And then if it does have a below market lease, that will also help in how long that lease is. So a lot of those factors kind of determine what the asset value might be worth.
Thank you for that question, George. Any other questions for
There
Mike?
was a question from Sharon Wu about how to decide what kind of a business you would want to buy. I think is if a restaurant is a good enough business that you would want to buy it, how would you decide whether it was good or bad? I think is.
Okay. Yeah. So if a restaurant's been established for a long period of time, at least 7 to 10 years, and it has a track record of profitability, you look at their financials, and then every year it's making money, and that revenue has been growing, and the sales have been growing, and the brand itself has lots of positive recognition. So if you go on Yelp and you see positive reviews on Yelp or Google and positive reviews on Google, and in general, the restaurant seems to be thriving, there's a value that's placed on a multiple of the last 3 years revenue of that restaurant, and that would be a good restaurant to buy if it kind of hits all those different positive attributes. That would be what you'd want to buy as a restaurant, a business. Yeah.
Thank you for that feedback. We're running now beyond our time limits, so we'll let Mike go. Thank you again, Mike. And again, we look forward to seeing you in the future to update us on the sector.
Thanks for having me. Yeah, you got it.
Thank you
All
so
right.
much. That was
Everybody-
great bit of information for those of us who don't do business ops. It's a whole different kettle of fish.
Oh yeah, it is. And I don't recommend it on anybody, actually. I mean, unless it's something you really want to be tortured with. Yeah, business opportunities has a whole nother segment. We do everything. We do leasing, biz ops, tenant rep, landlord rep, but the business sales side of our business is something that is very special for sure.
We really appreciate you being here and giving us your insights. That's
You got
excellent. We need that kind of input periodically.
Yeah, thanks for what you guys do. Yeah, it's great.
Mr. President, can